I wanted to ask you about this current coronavirus crisis we've been having, which has completely shaken up capital markets and the pricing in them. Do you think that the way the market has reacted and repriced assets has been sensible or puzzling to you?
I think financial markets are always a reflection of the economy and the anticipation of the economy. And it's fair to say that the world and the economy, but more than the economy actually, has been shaken much more than anybody anticipated 4 months ago by this coronavirus crisis. Financial markets and credit markets in particular were hit by 3 degrees of uncertainties. The first one was the risk of having a liquidity crisis, the same kind of crisis we had in 2008, but this was extremely quickly averted by the actions taken by central banks and governments. But we were left with 2 major uncertainties. One on the macro front, how the economy is going to recover from being put to a halt for a few weeks or months. And 2, how at the micro level, at the issuers level, how each issuer is going to come out of this crisis. What is going to be the impact on their balance sheet, on their working capital? What costs will have they been able to cut? And this is again unprecedented. And on top of that, we had a major logistic issue with all the players in the financial world and particularly the banks relocating from their offices to their homes. So markets came to, I mean, they were actually frozen for 1 or 2 days around the 19th of March, but it didn't last long. We had a sharp repricing, but what was more worrying in my view was not so much the repricing, it was much more the fact that liquidity had dried up and it was very difficult to price bonds. But from, in 1 day, we went from a market where it was extremely difficult to sell at the price indicated on the screen to a market where it was extremely difficult to buy at a price indicated on the screen. So that's when we knew that let's say the liquidity crisis was averted, but we were still left with 2 other degrees. The logistic issue of the banks was solved progressively, and I think it's fair to say that the banks and the buy side and the issuers and everyone has been surprised by how, I don't want to say easy, but how feasible it was to work from home in a relatively efficient way. I can tell you I'm a bit surprised by the equity markets and the fact that they are back to where they were in 2019, depending on which market you see, and if you exclude tech, which is arguably a big winner in this crisis. But it's very difficult, because growth is probably going to be impaired for some time. On the other side, you've had a massive amounts of liquidity injected in the system via central banks. But what is a bit puzzling to me is the fact that credit markets lag by a long distance equity markets, despite being they should be the direct beneficiaries of the central bank's interventions. But having said that, there is a saying in the market for the last 12 years, don't fight central banks. It's true that it's very, very difficult to be against the trend they create, but in my view, and I don't want to talk for my business, but I see much more value in credit markets than in equity markets, because I think there won't be that many defaults that we wouldn't have seen without the COVID-19. Of course, there will be a lot of defaults in 2020, but I think the majority of the large businesses that we will see defaulting this year or in the coming 12 months are businesses which would have defaulted otherwise, in the next recession. And everybody knew that a recession was coming within 1 or 2 years. While on the equity side, I think it's fair to say that growth has been impaired for some years.